The market's about to blow, but if you're freaking out right now, you're falling into their trap. Yeah, that's right. Bitcoin keeps trading sideways and Ethereum hit a new high, only to crash down hard. But big players are laughing all the way to the bank. They're crafting this chaos on purpose, shaking you up before the real pump starts. If you've been seeing nothing but red, are doubting the bull run, or are wondering if alt season's dead, stop. This isn't the end. It's the setup for something massive. In this video, I'm exposing the raw truth. Bitcoin completely losing its correlation from global liquidity isn't a collapse. It's a masterclass in psychological warfare to trick you and grab your gains. You'll see how market makers like Binance and Wintermute pull the strings while liquidity is not ready yet, and the hidden reasons the Fed might be delaying September rate cuts. And here's the real alpha. I'll reveal the Fire Pack, my very own powerful system of metrics to cut through noise and pinpoint when alt season is about to begin. These aren't random signals. They're your shield against manipulation, and they're screaming one thing: stay patient. By the end, you'll know why these metrics could mean the difference between losses and serious gains. If you're ready to level up, then hit the like button and let's get started. But first, a quick disclaimer. Nothing in this video is financial advice. Everything I'm sharing is for education and entertainment only. Crypto is very risky. You can make money, but you could also lose it all. Always do your own research and don't invest more than you can afford to lose. With that being said, let's break it down. You've probably noticed Bitcoin acting weird lately. It's completely disconnected from the global M2 money supply for the first time in years. Global M2 is all the money in the world that people can easily spend, like cash and bank deposits. Historically, when M2 grows, Bitcoin follows, since more liquidity fuels riskier assets like crypto. But right now, M2's at record highs, almost $100 trillion, up 8.7% year over year. And Bitcoin is just sitting there, stuck in this terrible range. Everyone's freaking out, thinking the bull market is done. But that's exactly what they want you to think. This disconnect is no accident. It's a deliberate fake out by market makers and whales to mess with your head. Big players want to buy your coins, but at a discount and without spiking the price. They can't buy billions in ETH or Bitcoin without the market moving against them. So they create confusion. They keep Bitcoin flat to bore you, let certain altcoins hit highs to spark excitement, then smack it down with dumps. Scary headlines hit like ETF outflows or September doom, and suddenly you're panic selling while they grab deals. Look at the evidence. Binance moved 47,000 SOL and more than 5,000 ETH to the market maker Wintermute. Everything is clearly visible in the on-chain data here. And boom, prices tanked. These aren't organic sells. They're coordinated to wipe out leveraged bets and weak hands. It's psychological warfare preying on your fear and greed. One minute you're hyped, the next you're terrified. While you're reacting, they're calmly building positions. This isn't new. It's the same playbook every single cycle. But this year, with high interest rates lingering, it's dragging on a lot longer, delaying the full bull run. Now here's the thing. If you understand this manipulation game, you can actually use this volatility to your advantage. That's exactly what I've been doing with perpetual futures on Margex. When you know these coordinated dumps are coming, having a reliable platform that can help you move fast is super important. Margex has been solid during these volatile periods when timing is everything. If you want to give them a try, then use my code FireHustle. You'll get up to a 20% deposit bonus. The link is in the description. Give it a shot and let me know what you guys think in the comments below. Now back to the bull run being delayed. Why is the market being suppressed now? Well, it's because the chess pieces aren't all in place yet. Liquidity is high, but not where it needs to be. High interest rates mean less cheap money flowing. So it makes more sense for the market makers to hold back the rally. The last thing they want is a weak pump that fades away quickly. If we start ripping too early, the market won't have juice for that massive blow off the top peak that we all want. So they liquidate, suppress, and they wait. It's very frustrating, but very bullish. It means the real pressure is building, ready to unleash when conditions are right. And these conditions, well, they're close. The Fed signaling September rate cuts with a high probability according to CME FedWatch. That's huge. Lower rates weaken the dollar, which means people look for riskier investments and they ultimately flood liquidity into stocks and crypto. We've seen it before. The rate cuts in 2020 and 2024 marked the beginning of parabolic rallies in the crypto market. Rate cuts turned September green. This is another perfect example of why you need to subscribe to the channel and turn on post notifications. I'm doing all the heavy lifting for you by watching these metrics very closely. I drop at least one video every single day, so you get to keep tabs on the market, and subscribing is free and an easy way to give yourself a consistent source of alpha, but also support the channel. Now, back to the Fed. They're slowing things down because of more than just inflation. There's big risks piling up. The yen trade could collapse, trillions in bonds are coming due, cash buffers are drying up, and the giant derivatives market could explode. They're doing just enough to hold things together. There's some great analysis on X that points out that the Fed's hesitation isn't really about inflation, but about bigger risks tied to global stability and politics. But once those rate cuts hit, the liquidity block is finally removed and the market will definitely respond. If you're feeling pain, you're not alone. I'm seeing even veteran traders flipping bearish on small dips. Their reality is completely twisted. But bull markets don't end like this. They end in wild hype. Right now, the sentiment is really mixed and not many people are bullish. That's your clue. We're not at the top. Zoom out. Bitcoin got absolutely wrecked in the last few weeks, but altcoins aren't tanking by 90% like before. Ethereum rallied hard before cooling off, and ecosystems like Solana are growing in total value locked on chain. We're actually starting to see some rotation, which is phase 2 of alt season, where Ethereum leads before large caps follow. Don't jump in blind and don't just follow the herd. You're a wolf, not a sheep. That's how manipulation wins. You need a shield, a full picture approach with the data to cut through all of the noise. That's why I put together the Fire Pack. It's 9 metrics that I found myself coming back to on a regular basis, and I'm sharing them with you today. They're a comprehensive pack covering dominance, liquidity, sentiment, and on-chain data for the whole view. I keep seeing everyone else talk about the same 2 or 3 metrics over and over again, but the Fire Pack covers every angle from macro triggers to retail signals. They show alt season is building up, but not here yet. Stick to them and you'll stay patient, which is the name of the game right now. So let's break them down. I put them into logical groups to make things a bit easier. First are the market rotation signals. Number 1 is Bitcoin dominance, which just means Bitcoin's share of the total crypto market. For altcoins to really run, that share needs to break below 55% and stay there. Right now, it's sitting at around 58%. Look at where we got in the recent rally at the end of last year, under 55%. The fact that we're under 60% right now is a good sign, but it's still shaky. Patience is key. Number 2 is the ETH to BTC ratio, which shows how much Ethereum is worth compared to Bitcoin. Right now, we're at 0.03, which looks great on this chart. But zoom out and look at the bigger picture. Where we really need to be is here in this range, which is holding steady above 0.06. There's a long way to go here. It's building, but not ready just yet. Number 3 is Ethereum dominance, which is Ethereum's share of the overall crypto market. This is a number that needs to go up. We're at 13.7%. But it's the same story here too. We need to be up in this range. When it grows over 16% and beyond, it usually lifts altcoins across the board. So it's getting closer but hasn't hit the zone yet. Next up is market cap growth. The key metric here is the altcoin market cap, which is also called the total 3. It measures the total value of all altcoins excluding Bitcoin and Ethereum. For a real altcoin rally, it needs to break well above the historical tops that are around $1 trillion. It should actually go a lot higher while showing higher highs and higher lows on the chart. Right now, we're seeing slightly over $1 trillion, but no real breakout yet. I don't have a target for you in terms of a number because this one really depends on how much money the overall crypto market can command as a whole. This is definitely one to watch. And next are liquidity indicators. Metric number 5 is the stable coin market cap and inflows. This basically shows how much money is parked in stablecoins like USDT, which acts as fuel ready to move into crypto. There's already a bullish setup here. We have more money than ever before sitting in stablecoins, just ready to be deployed. We're just under $300 billion here. To put that into perspective, in 2021, this number was around $100 billion. So this metric is already right on the money. Metric number 6 is the DeFi total value locked, or TVL, which means how much money is staked inside decentralized finance protocols. More TVL shows real usage and growth across altcoin ecosystems like Solana. This metric reached a high of $180 billion in the last bull run. This is one that you're going to see run up really fast once things get rolling. We're at about $150 billion right now, but I'm expecting a key level here to be at least $300 billion. We're getting close to the all-time high, which means the trend is positive, but we haven't broken out just yet. Metric number 7 is macro liquidity, which is how much easy money is flowing in the global economy. For crypto, this means we need a rate cut confirmed and M2 money supply growing even more than it is right now. This is also tied to stablecoin growth because that liquidity is going to be locked and loaded to deploy to crypto. Right now, M2 keeps hitting new highs and September cuts have a very high likelihood. It looks primed, but confirmation is still needed. Next are the sentiment triggers. Number 8 is the crypto fear and greed index for altcoins. This is a simple measure of sentiment where higher numbers mean more excitement and risk-taking. For a healthy rally, it needs to pass at least 70, showing strong greed but without going too far. We're in the mid-range right now, which is actually a great sign. It means we're not bearish. Alts are heating up and greed is building, but we're not there just yet. And last but not least, number 9 is Google Trends for search terms like crypto. You can have fun with this one and try different terms to see if you can find the best indicator, but here I'm looking at searches for crypto globally. This tracks retail interest since spikes mean everyday investors are paying attention. Here you can see that we're spiking up, but we're nowhere close to that 2021 peak. But I like what I see. We're at the highest we've been in the last year or so, which means things are trending in the right direction. But again, we're not there just yet. And there it is, as simple as that, the Fire Pack. 9 metrics that give you a full view. They don't just focus on Ethereum, they blend dominance, liquidity, sentiment, and more. Right now, the vast majority of them are telling me that we're getting ready. Stablecoins are firing, dominance is dropping, and DeFi TVL is going up. But everything else clearly shows that alt season's not here. Ethereum's high was a tease, but the position didn't hold. We're bouncing back and forth between phase 1 and phase 2. Ethereum is starting to lead, but big and small alts need more. Stick to these metrics. They're your compass regardless of how confusing the market gets. I know these 9 metrics are all fragmented and tough to track. I'm working on putting together everything for you in one single dashboard. If you're interested, subscribe to the channel and give me a follow on X. The link is down below. I'll be sharing it with my subscribers and followers for free as soon as it's ready. The truth is, alt season won't just show up suddenly with a single god candle. It builds layer by layer. And when all these metrics finally align, the breakout will be undeniable. That's when money floods in, retail FOMO goes crazy, and the charts light up. Until then, stay calm, stay sharp, and let the data guide you instead of emotions. And if you want to go deeper into this and learn how I'm applying these metrics in real time, then come and join me in the FireHustle VIP Discord. That's where I break down the market every day with my team, share updates, strategies, and keep the community ahead of the curve. The link is in the description if you're ready to take it to the next level. That's it for today. Remember, none of this is financial advice. Always do your own research, manage your risks, and never invest more than you can afford to lose. If you enjoyed this breakdown, then hit the like button and subscribe to the channel, and I'll see you in the next one.